Even after the weaponization of the dollar and endless deficit spending, the world is still buying US bonds. And to many of us, it's really mind boggling. Why do they still hoard treasuries like it's some pirate treasure? And to add to the insanity, even Warren Buffett bought an additional $10 billion of T bills after the downgrade of US debt by Fitch. It seems that the demand for treasury bonds will never die. And this is where we need to sit down and understand what is really driving the demand for treasuries. Because once we do, we'll come to two big realizations. Number one, de-dollarization is going to take a long time, much longer than many of us really realize, because the whole world is connected to the US debt market. And number two, there are many entities out there that benefit from the dollar system. And no, I don't just mean the US government or the Federal Reserve. Those are the obvious culprits. We know the system allows them to endlessly print money for spending, but that is nothing new. I'm talking about something more sinister and insidious. So we're going to go through why the world still piles into US debt even today, even after freezing Russia's reserves and using the dollar as a financial weapon. The demand for US debt is still very strong. Around two-thirds of public debt is held by domestic holders and a third is owned by foreigners. American pension funds have over $1 trillion in treasuries, while countries like Japan also hold a ton of bonds. Each of them have their own reasons for buying all these IOUs, and it's supremely important to understand why. There's a big reason why the US Treasury market has morphed into one big gigantic creature. It is well over $25 trillion strong and is bigger than the G7 nations and China combined. Every time there's chaos or fear in the markets, everyone runs towards US bonds as a safe haven. And whether we like it or not, that is the default reaction from investors. And this is the reality of today's financial system. And the larger this market becomes, it makes it harder for the world to slowly deleverage. Plus, the effects of a default or inflating the debt away will essentially doom the global economy. So, why do countries buy US Treasury bonds? Aren't they afraid of counterparty risk? And what if their holdings get frozen away like Russia? Well, they don't really have a choice because the dollar is the world reserve currency. If you want to import commodities like oil, gas, you need those green pieces of paper. And according to the IMF, the majority of exports around the world are priced in US dollars, except for Europe, over 80% of global trade is invoiced in the reserve currency. So whether it is a gadget coming from China, oil from Saudi Arabia, or rice shipment from India, chances are both sides are transacting in dollars. And you can see how this creates a natural incentive for countries to hold dollars. Now let's ask ourselves, who is the biggest consumer in the world? Well, it is the United States. They imported almost $3.3 trillion worth of goods in 2022. In fact, this figure has risen by over $420 billion. And what do you think America pays the world for their goods? They pay in US dollars. So now you have a flood of dollars that is coming from the world's biggest consumer. You know, that's the joke that America's biggest export is dollars, and that is exactly what their trading partners are now holding, a ton of greenbacks, and they obviously can't hold it in cash. We know that inflation is a clear and present danger which erodes the currency's purchasing power. So countries have no choice but to invest and roll dollars into US treasuries. And we can see that even though China is de-dollarizing and dumping treasuries, there were months where they had no choice but to increase their holdings. Like back in March, when it rose by $20 billion worth, they have to put it somewhere, and a short-term solution is the US debt market. And you can literally see how self-reinforcing this system is because America keeps spending and importing stuff. The world is forced to deal with this flood of dollars. You just can't take every dollar and dump it into gold because, like it or not, you cannot risk a US dollar shortage. And let's flash back to 2022. The Federal Reserve raised interest rates, and that just decimated the economies of emerging markets. We are seeing currency crises pop up faster than new Starbucks stores. It was insane. The yen, the euro, and the Chinese yuan all collapsed against the dollar last year because the Fed was draining liquidity by jacking interest rates up. Just look at the Japanese yen in yellow. They are now aggressively selling their treasuries to defend its value. And as a country, you need a stash of US dollars in order to buy back your own currency in a crisis. And if you don't, local inflation could skyrocket and destabilize your economy. And once again, it creates a synthetic demand for dollars. And this keeps the US debt market all the way on top. The next group of entities that buy US treasuries are corporations and companies. And many people don't talk about this relationship, but it is extremely important. And just like you have your savings, companies also have their own corporate treasury account. So it's just a fancy account where companies manage their finances. The aim is to maximize profit by investing the money well, as well as reducing any risk associated with the investments. And let's say you are Coke and you sell like a bazillion cans a year, and now you have billions of dollars in profits, right? You have to decide how to spend the money. Are you going to invest it in the company itself? Are you going to do stock buybacks? Or should you roll the money back into government bonds? And how you invest all depends on the economic environment. What is the risk-free rate? What return can I get on a near guaranteed investment? And to answer this question, companies normally look at the 3-month treasury bill as a gauge. Right now, we have a risk-free rate of almost 5.4% in treasury bonds. It is risk-free because there's an implicit guarantee. If a default happens, guys, it's very likely the Federal Reserve will step in and print money to save the day. And because of higher interest rates, we have a ton of companies that are plowing their profits into treasury bonds. They are buying up US debt because the returns are just too attractive. Back in 2017, Apple itself owned over $52 billion in treasury bonds, putting it above Netherlands, Mexico, and Australia. So we can't discount the demand that comes from companies and corporations. In the first quarter of the year, tech company Palantir bought 1.6 billion in US bonds because the yields were just too attractive today. Why invest in anything when you can get over 5% for doing absolutely nothing? So companies today are facing a global slowdown and they have to make a choice. Do we borrow money at high interest rates and risk losing our principal, our investment, or do we buy bonds and enjoy the interest? And if we look at the AAA rated company Johnson& and Johnson, their bond yields across the board are over 5%. That is a tremendous repayment burden if something screws up. But if you buy treasury bonds, high interest rates suddenly work for you, right? Because 5% of $1 billion is 50 million risk free. You can pay a ton of bills and salaries with that amount without jeopardizing your capital. So demand from companies will always be there, especially when interest rates are going higher and staying high. Now let's talk about you and me, because individual investors like us are also huge buyers of treasury bonds. If you bought into money market funds or bond ETFs, you have probably bought into treasuries as well, because once again, they are virtually guaranteed investments thanks to the money printer. And because the world is terrified of a global recession coming soon and yields are so high, we are seeing record inflows into money markets. In just a week, global investors plowed over $70 billion into money markets, 40 billion of which went into US funds, and a vast majority went into US debt. And this fuels more demand for treasuries, even though Janet Yellen, she's flooding the market with new issuance. The latest treasury auction of the 10-year notes came in at under 4% yield. So there's still decent demand from investors and the supply is being absorbed for now. And this is the big issue we have to understand. The Fed can always create demand for treasuries by hiking interest rates. It creates a kind of no choice dilemma for investors on the street like you and me, right? Because when rates go higher, the economy starts to slow down. And this means a recession is always a threat. And if you're looking for a safe haven, there aren't really many choices out there. You could run to gold, but if the economy crashes in a bad way, there could be a sell-off there to raise liquidity. You can also try other currencies, but they are getting devalued thanks to the safe haven effect. The majority of the BRICS currencies all fell against the dollar ever since Powell started to hike rates. The dollar's reserve status is essentially draining money away from emerging markets into treasury bonds. Where else can you really hide? So the average Joe Schmo doesn't have much of a choice. There are few safe havens around where the economy is in trouble. The entire system is set up to keep the US debt markets on top because of the network effect. But let's talk about the darker incentive of the dollar system. There's a more insidious reason why the world wants to keep the dollar on top, because the system is structured to keep the rich rich. And it's quite complicated, so I'll just boil it down as simply as I can. Because of the Federal Reserve constantly stepping in to manipulate the economy, we don't really have a nice and easy growth rate, right? Everything is extremely volatile right now. People can't gradually accumulate wealth anymore unless they take risks. You can't save your way to wealth anymore. And what we have are these insane boom and bust cycles where asset prices either have an insane rise in value or horrible crash like back in 2008. And all these dislocations of value give opportunities for people in the know to get richer by buying up assets. We kind of know money printing reduces the purchasing power of money, but if you're the first recipient, you have it at a maximum value and you can purchase real assets. And let's use real estate as an example. Over the past decade, a ton of people, guys, got insanely wealthy because they bought homes using cheap money and locked in a mortgage that will eventually get inflated away. So now they have an asset that will rise in price, and rentals will also rise because people can't afford to buy. And if we track the CPI for shelter, we can see it is an absolute disaster. Inflation for shelter is still almost 8%. So if you own rental homes, your income stream grows bigger and your mortgage will get paid off earlier. So by design, the dollar system was meant to transfer wealth from the many to the few. And the only way to survive is to make smarter choices. You need to understand the system because your financial future depends on it. Just 2 years ago, the mortgage rates were at 3%, but now they are hitting 7%. That's more than double. So while one side of the population is paying higher mortgages, other people are benefiting. People who position themselves well are now getting paid by the banks and the big investment funds 5.5% to park their money there risk-free. You can see how the dollar system helps those in the know get richer while everyone else is getting slapped in the face. And because inflation is a feature of the system, over a long period of time, people who own assets will be the big winners. Sometimes there will be real estate, sometimes it could be US Treasuries and stocks. So we need to understand the interest that are keeping the Treasury market strong. There is an incentive to keep the US debt market all the way in the top. The world is still buying Treasury bonds because there isn't a choice and no better alternative today. What everyone is doing today is playing a grand game of musical chairs. And this is the big question. How much can I milk from the dollar system? How much returns can I get before the debt market implodes? Because eventually it will. In a story from Bloomberg, the 30-year Treasury auction signals weak demand to wrap up week of big sales. And this lack of demand pushed yields higher, closer to 4.2%. And this is bad news because now the debt burden is growing even faster and will eventually push things towards the default. It's basically a ticking time bomb. But at least now you know why the US Treasury market is still number one today. It all stems from the dollar as the reserve currency and this incredible network effect that's been built up over the past few decades. Now, this means the dollarization won't be an overnight affair, and whether we like it or not, the US debt market still controls global investment. But let me know what you think in the comments below. How long can the Treasury market really last? And are there any other alternatives? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.